Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. Ice raw sugar in New York. I know I've been going on about this for some while now, but the core of the bullish support here for this market has been always the lower time, highlighted in dark blue on my daily chart, of the December 2020 to April 2021 bullish shift pitchfork, currently at 1846. However, that relationship seems to be tested as the shallower bullish shift pitchfork for the late October 2022 to early January 2023 bullish shift pitchfork, highlighted in purple on my daily chart, and a more newer one, has seemingly started to take the lead. The market is now approaching the upper time, currently 22.96 of the original December 2020 to April 2021 bullish shift pitchfork, having punched up through the middle time, currently 21.81 of the newer late October 2022 to early January 2023 bullish shift pitchfork. It's a lot of bullish shift pitchforks. We also have running interference on the market, the neckline currently at 22.23 of the complex August to November 2021 triple top, which is highlighted in bright red on my daily chart. The market penetrated this neckline come resistance, come support back in late February, but was not able to sustain the move higher with a changeover gap at the start of March. That was finally filled in last week. All this is in the shadow of January's monthly key reversal up. So, as I've previously commentated a few weeks ago, I took a look at the longer term monthly charts, and there was the answer to the question I had already earlier posed of where next for this market. You see, we had a secondary harder to reach target in the 2140 area for the diamond bottom over 2019 to 2020. This target has now been reached, but there is more. You see, I took another look again today at the longer term chart, and what I saw is that despite the overhead resistances, specifically at the 38.2% absolute Fibonacci line at 2235 and the November 2016 high at 2259, and despite the upper time above, despite all of these, there is still opportunity to try higher. There are two possible avenues to look at. The first, longer term potential, is the October 2016 high at 2390. This is also reflected in the July 2012 high at 2024 even. The second avenue is much more longer term, possibly a couple of years, and that's to look at the action since Q2 2020 to date as a possible bullish halfway hesitation. This would have a potential up to 28 even. This is one of those potentials you put in the back of your diary and look at occasionally, but right now it still looks viable. The only fly in the ointment in this idea is to just perhaps look at the action from 2012 to date as a possible reverse head and shoulder in construction, in which case we might well see an even failure at the 24 even area to fall away and construct the second shoulder. This is an even longer term pattern. Watch this space though, it may be some while. Ice Europe white sugar in London. As I repeated here for many months, changeovers produce some strange events. Since mid-September last year, this market had been dominated by the one action, the changeover gap that happened back then. And one can say a lot of things about what happened beforehand, but that changeover gap seen here on the continuous daily chart was really big. There's been a number of attempts to try and fill it since. There's been a laborious process. However, the gap has now been filled. So I won't have to start off with the same commentary next time, for which I am grateful. Last week, the market broke up and out of the upper time, currently at 6:15.40 of the late October to late November 2022 bullish shift pitchfork, highlighted in dark blue on my daily chart. We've even managed to punch up through the September 2022 high at 6:33 even, though we've yet to properly stabilize over it. This now leads to the question, how far can this rise go? Well, looking at the longer term charts, and you have to look at the longer term charts, there are two possibilities. The first is a February 2020 to date ascending wedge pattern. This one gives some way out there targets to look at on the top side, and please be aware the pattern can also have targets on the downside. But for now, I'll concentrate on the top side. An initial target X would be in the 765 area. of a secondary harder to reach target X1 in the 869 area. These are obviously way out there targets, ones to make a note in the back of your diary and maybe look at once a year or so. Alternatively is to look at the action since February 2021 as a possible bull channel. And that's currently between 561 even to 684.90 on the top side. This utilises the same uptrend as the ascending wedge pattern, but seems a more reasonable, if still a longer term opportunity on the upside. Sugar white premium spread. We're well into 2023 and the chart continues to be very colourful. Many things are going on all at the same time. Okay, so I'd previously spoken about two big picture items in here on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, highlighted in dark blue on my weekly chart, with the market at the moment in between the lower time below, currently 94.25, and the middle time above, currently 168.25. I've said this so many times before and I'll repeat it here again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack. Next we have an ascending expanding wedge pattern highlighted in bright red trend lines and above the current market. This was formed between mid-April to late November last year and it's currently 170 even to right off the top of my weekly chart. To me it was and still is not the best looking of such wedge patterns, but it is also still out there. And it comes with all the possibilities such a pattern invokes. The most recent activity had been the market's moves up through the slowly rising long moving average, currently 129.5, as well as the 50% Fibonacci lines at 128.75 and 131.5, and the June 2020 high at 134 even. However, last week the prices peaked at the 2013 high at 152.5, with what looked like a shooting star pattern. Yet so far this week we've not seen any attempts lower, and I suspect that may be under threat in the coming weeks. I am now wondering if perhaps a bullish pitchfork for the August 2021 to February 2023 action may be on the cards. I'll give it one further week to see. All this is in the shadow of the monthly key reversal up we saw in February this year. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.